Good afternoon, ladies and gentlemen, and welcome to the earnings conference call for Q1 FY26 for PTC India Limited. PTC India was incorporated in 1999 to undertake trading of power to achieve economic efficiency and security of supply and to develop a vibrant power market in the country. PTC is a pioneer in starting a power market in India and undertakes trading activities that includes long-term trading of power generated from large power projects as well as short-term trading arising as a result of supply and demand mismatches. In addition to the trading business, PTC has incubated techno-commercial consulting business to develop power market for the C&I consumers, SEZs, port trusts, etc. Let us now begin with the introduction of the management team. We have with us today Dr. Manoj Kumar Jhawar, Chairman and Managing Director, Mr. Rajiv Malhotra, Executive Director and Chief Risk Officer, Mr. Pankaj Goyal, Executive Director and CFO, Mr. Bikram Singh, Executive Director, Marketing, Mr. H.L. Chaudhary, EVP, Commercial and Operations, and Sri Anand Kumar, VP, Investor Relations. At this moment, all participant lines are in the listen only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. I would now like to request Dr. Manoj Kumar Jhawar, CMD, to give his opening remarks. Thank you, and over to you, sir.
Good evening, everyone. I extend a warm welcome to all of you to our post-earning cast following the announcement of our Q1 FY 25-26 results. This call gives us an opportunity to share key insights into our company's performance and the long-term vision. We deeply value this engagement with our esteemed shareholders, our investors, partners, and the representatives who play a pivotal role in our continued growth and success. During the first quarter of new financial year, while national demand of energy experienced a marginal dip of 1.2%, our trading volume grew by 13% to 23 billion units. This was achieved while maintaining a trading margin of 3.37 paise per unit. Notably, 60% of the trading volume came from exchange traded products, while the remainder came from bilaterals, long-term, medium-term contracts. Improved margin realization has also contributed to an 8% increase in the trading income. Just to recall, in the last quarter, we informed you that we have floated an invitation of expression of interest for 500 megawatts of renewable energy capacity. The response has been encouraging, and our team is working with project developers to finalize purchase and sale agreement at competitive rates. As the thing developers, we will inform the shareholders and exchanges. Our product and service offerings are helping in retaining clients, which are C&I segment, and increased business opportunities. We are bid consultant for renewable capacity development of around 1000 megawatt in solar and hybrid mode. In the cross-border market, our operations continue across all three grid-connected neighboring countries, which is Bhutan, Nepal, and Bangladesh. Energy flows to the Bangladesh remain stable under the agreed contractual framework with regular flow of payments to our accounts. Bhutan is experiencing rising year-round electricity demand, particularly during the winter months when the water availability for hydro plants declines. Similarly, in Nepal, we have commenced both import and export of electricity based on their supply-demand profiles. Looking ahead, we expect power demand to grow steadily at 6 to 8% per annum, although short-term volatility may arise due to transient weather conditions. A favorable monsoon is expected to create more demand and support this outlook. The guidelines for PSP-based power will further accelerate the adoption of storage in the energy basket. Regulatory bodies are also actively fostering market reforms, including discussion on virtual power plants and standardization of exchange products, including amendment in power market regulations to ensure level playing field among exchanges, traders, and OTC platforms. I now invite our Executive Director and CFO, Sri Pankaj Goyal, to present the financial highlights for the quarter. Following his presentation, we will open the floor for question and answer session. Thank you once again for your continued trust and support. We appreciate your participation in today's call.
Thank you, CMD sir. Good evening to all. So now I will go through the financial performance of PTC India Limited on standalone basis for the quarter ended June 25 vis-a-vis the corresponding quarter June 24. So the volume has for the quarter has increased by 13% to 23 billion units from 20.5 billion units. Volume has increased mainly because of increase in exchange trade and cross-border trade. Operating margin from sale of electricity has increased by 8% to 78 crore from 72 crore. Total operational income decreased by 13% to 111 crore from 127 crore. The profit before tax stood at 141 crore as compared to 144 crore during the corresponding quarter. Profit after tax stood at 105 crore as compared to 106 crore. Total comprehensive income stood at 105 crore as compared to 107 crore. Earning per share for the quarter stood at rupees 3.54 as compared to rupees 3.59 during the last corresponding quarter. Now I'll go through the financial performance on consolidated basis for the quarter ended June 25. Volume has increased by 12% to 23 billion units from 20.6 billion units. Profit before tax from continuing operation has increased by 42% to 289 crore from 203 crore. The profit before tax has mainly increased on account of higher share of profit before tax from PTC Financial Services. Profit after tax from continuing operation has increased by 61% to 243 crore from 151 crore. Consolidated PAT from continuing operation and discontinued operation has increased by 28% to 243 crore from 189 crore. Total other comprehensive income has also increased by 28% to 243 crore from 190 crores. Earning per share for the quarter on consolidated basis stood at rupees 6.59 as compared to rupees 5.87. Thank you.
So now we can have the floor open for question and answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. To ask a question, please click on the Q&A tab on the panel and click on raise hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. You may also type in your text question in a ask a question tab. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please click on the Q&A tab on the panel and click on raise hand button.
The conference is now being recorded.
We'll take the first question from the line of Mangesh Kulkarni from Almonds Financial Services. Please go ahead.
Am I audible?
Yes, sure.
Yes, sir. Please proceed.
Yes, sir. Thank you for giving me an opportunity. I just wanted to ask about with now our subsidiary PTC Financial Services has also reported very good numbers and giving very good pictures on the recovery front in the next quarter also. So, are we expecting any special dividend from the PTC in this coming financial year, as well as what are we coming back to our disinvestment plans for the PTC, what are our PTC financials? So, what are our views on the subsidiary now?
So two things regarding any special dividend. I mean, the matter has to be considered by the board. Whenever a consensus emerges that any dividend is to be declared, we shall definitely be making an announcement. Here, I would not like to go further than that. That is one thing. Second thing regarding the disinvestment of PTC Financial Services Limited. Board is seized of the matter as I had told in earlier conference calls also. This matter is being actively discussed, and as and when any consensus or a directional view appears from the board, we shall be informed the market. Right now, this matter is under consideration of the board, so I cannot comment more than that.
Okay, sir, and how do we view our prospects for the Hindustan Power Exchange after this new discussion came on the connectivity of the exchanges?
Yes, actually, market coupling has
Coupling,
been some.
yeah.
Yeah, market coupling is something about which we have been since a very long period advocating. We believe that it is a good development. It is a favorable development. It will help consolidate the very fragmented markets. It will bring in competition, and it is likely to help the HPX significantly. So we hope that this is going to be another business driver for us going forward. Market coupling would definitely help HPX, and since we own 22.5% of the HPX, indirectly benefits would accrue to PTC also.
And sir, these exchanges have also started electricity futures. So PTC as a trader is participating in these, particularly MCX and all these things.
Yes, actually, I mean, this is a new development recently, and in today's AGM itself, we had put up a proposal before our shareholders to allow us to participate in this market in a significant manner on the and represent our clients and trade on their behalf. So I hope when the final results of AGM are announced, we will have necessary authorization from our shareholders also in this regard. And yes, we are in discussion and continuous engagement with both NSE as well as MCX, where these future products have been launched, and we intend to participate meaningfully in these markets.
Mr. Kulkarni, does that answer your question?
Thank you very much, sir.
Thank you. We'll take the next text question from Darshika Khemka from AV FinCorp. And the question is, what is the reason that surcharge income has been recognized as other income, which was a part of other operating income in the last quarter?
I would request our CFO to respond
Yeah.
to that.
So you know that the historically we were treating the surcharge income in our other operating income. So now the recently in 24 and the early 25, the Institute of Chartered Accountant through their advisory committee has opined in some other case that these type of surcharge income and surcharge expenses has to be shown in other income and other and interest expenses, finance costs. And in that regard, we have a discussion with our statutory auditors also, and we have also examined the various of our promoters also, like they are the big generators and they are also receiving surcharge expense income also. So as per their balance sheet of the promoters and other traders also, so they are also showing this surcharge income in the other income. So accordingly, on a prudence basis and to be more presentable, we have also regrouped the figures actually instead of other operating income to other income also. So that is the only reason, but there is no financial implications of the same.
So in summary, it is compliance of the regulatory directives and practice being followed in peer companies. So this decision has been taken in consonance with that and in consultation with the auditors.
Thank you, sir. We'll take the next question, voice question from the line of Channamallu Halagodi, an individual investor. Please go ahead. Mr. Halagodi, I have unmuted your line. Please proceed, sir.
Am I audible, sir?
Yes, you are audible, sir.
What I'm asking the question is a matter of transparency in decision-making process of PTC India, sir. Since last 5 years, the divestment of PTC India Financial Services is pending. No clear answer is given to investors from parent company regarding its divestment. We invested in PTC India only on core business, but still you are engaged in financial services business. Now government announced implementation of market coupling from January 2026. In this situation, management should concentrate more on core business. What is your real stand with divestment of PTC in the financial service, sir?
Sir, as I told you earlier, if I may recapture the history, previously the board of the PTC had taken a decision that will go for disinvestment of PEL as well as PFS. At a later stage, the process for disinvestment of PEL was taken forward, but a hold was put on the disinvestment of PFS. At a later stage, we concentrated more on disinvestment of the PEL, and that has been successfully concluded as is known to all shareholders. Now, again, that question has come up for consideration of the board, and it is under active consideration of the board. Right now, unless and until a decision has been taken by the board, I cannot really give a straight jacket answer to this question, ki what we are going to do, when we are going to do. Unless and until board itself takes a call, it cannot be responded like that.
Not cancelled, no, sir.
No, definitely not cancelled. As I told you, this matter is under consideration of the board.
Okay, sir. Okay, thank you.
Thank you. We'll take the next text question from Harshit Singhania from Robo Capital. And the question is there any quantifiable impact from market coupling on HPX?
Actually, HPX is likely to benefit from this market coupling thing. And if we examine the entire market scenario, the collective segment has got two components. One is the DAM and another one is the RTC. So in the DAM component, the volume traded is roughly around 80 billion units. And if we multiply the 4 paise per unit margin, which is earned on all power traded in the DAM market, that gives us a revenue potential of around 240 crore rupees per annum. That was basically 100% concentrated in IEX earlier. Now, with this coupling thing happening, the exchange which is able to provide better services to the clients, the exchange which has got better connect with the clients, someone who has got a better technology platform would possibly have a real shot to, earn some volumes out of that market. So that remains to be seen as to how much of that 100% concentrated market from IEX can be taken away by HPX. But currently it is zero, so I would say that journey only upward.
Thank you, sir. The next text question is from Suyash Bhave from Wealth Guardian, and the question is PTC holds 22% in HPX. Due to that, they cannot trade on it. Now, post market coupling, will PTC look at reducing in stake in HPX below 5% to start trading on it?
Our investment in HPX was a strategic one. Now, when to divest, whether to divest, would be a call to be considered at an appropriate point of time. At this point of time, we would be basically interested in watching the market as it evolves post this market coupling thing. But a decision would be taken in the best interest of both HPX and PTC. so that long-term value to the shareholders is accrued.
Thank you, sir. Participants, to ask a question, please click on the Q&A tab on the panel and click on raise hand button, or you may also type in your text question in the ask a question tab. The next text question is from Ragini Pandey from Elara Capital, and the question is, what was the short-term volume in Q1 FY26, and what the long-term and medium-term volume in Q1 FY26?
Pankaj, do you have data?
Yeah. So in Q1 26, the short-term volume, including the exchange trade, was around 13.9 billion units. And as far as the long-term trade, including the cross-border, is concerned, so the total was 8 billion units for FY26, first quarter of FY26.
The next questions are, what is the share of short-term and long-term volume in overall volume? And what was the trading margin in these segments, that is short-term and long and medium-term?
Just,
Yeah.
just a minute. So the overall volume for short term in 60% and long term is 40%.
Margins.
Margin. Just a minute, yes. And the margin is 3.37 paisa.
In short term?
And in short term, the margin is 0.81 paisa.
Long-term margin?
Long term margin is around 7.49 paisa.
So the next question is, why did the surcharge income decline?
You see, actually, I mean, earlier, if we recall, in previous shareholders interaction, a concern was raised regarding our huge outstandings accumulating against the Bangladesh as well as a few states. So the increasing areas were a cause of concern for many shareholders. So we took a concerted efforts in that direction, and then as a result of that effort, the outstanding position against many clients has improved significantly. Now the Bangladesh is making the timely payment, and sometimes it is even availing a rebate. So what is happening that earlier, whatever delay was there, because of that we were able to earn rebates, while the mm, we were able to earn the rebate, but the clients were not, the discounts were not earning the rebate. Now what is happening that discounts are also earning the rebate, they are making timely payment, and we are also making timely payment to the generators. So our rebate income, which is net of the rebate which earned from generator and the payment which we receive from the discount, it has come down, but it is an indication of actual better management of the receivables.
Thank you, sir. The next text question is from Ragini Pandey from Elara Capital. What was the revenue and PAT from HPX?
Yeah, I'll tell you.
Pankaj is responding that.
Yeah. So revenue of the HPX is total revenue is 12.42 crore for this quarter, and PAT for this quarter is around 6.41 crore.
Thank you. The next text question is from Suyash Bhave from Wealth Guardian, and the question is there any update on the capital allocation of the funds received from the PTC Energy stake sale?
We have retained a large portion of the divestment proceeds, and we intend to deploy that into meaningful businesses which are not far off from our core area of operations. But right now, capex allocation for next 25 years is the kind of decision which we are going to take. So that takes time. We are considering the options. Whenever we have concrete announcements to make, we will come to the market. We are right now evaluating many options.
Thank you, sir. The next text question is from Harshit Singhania from RoboCapital. Is there any revenue or margin guidance that the management would like to give for next 2 to 3 years?
No, no, forward-looking statements I would not like to venture into, but I mean what I can say is कि we will like to maintain the momentum. Our trading volumes have been growing at a rate which is faster than the total energy generation rate in the country. The total overall generation had grown by a certain number, but our trading margins have grown by almost 11%. So we will like to keep that momentum, and we hope that it will serve our shareholders nicely.
Thank you, sir. Participants, to ask question, please click on the Q&A tab on the panel and click on the raise hand button. You may also type in your text questions in the ask a question tab. The next text question is, what is the company's take on virtual power purchase agreement draft notification floated by CERC?
Yeah, it is a very interesting emerging area, and being a trader, we see a lot of value. But we have to wait for the final guidelines to appear in this regard. This will be a very interesting opportunity in the sense that a large part of that business is likely to be built on solid IT platforms and effective execution. So we are seized off that and we are watching that development keenly. We hope to play a meaningful role in that market as and when those final guidelines come.
Thank you, sir. The next text question is, Ministry of Power has recently withdrawn Uniform Renewable Energy Tariff, that is URET. How do you see impact of this on your company?
Basically, it has to be understood that this mechanism was instituted by the government because under the REIA nomenclature and REIA framework bids, the states were unwilling to enter into power purchase agreements. Now, PTC not being designated as REIA, it has got no impact on the business of the PTC. If we get an REIA assignment, which we have been trying for quite some time, maybe it will have a positive impact on outlook. Right now, it has got no impact.
Thank you, sir. Participants, to ask questions, please click on the Q&A tab on the panel and click on raise hand button. You may also type in your text questions in the ask a question tab. The next text question is from Suyash Bhave from Wealth Guardian. And the question is, does introduction of market coupling indicate potential future introduction of MBED? And if implemented, is MBED positive or negative for PTC?
It is 100% positive. If MBED and then at a later stage, if MBED comes, then what it would entail is that all the capacity which has been tied into the long-term contracts, which are almost 85% of the power being traded, generated, and consumed in the country, would also come to some kind of market mechanism. And that being the case, that will be an exponential growth opportunity for trader like us.
Thank you, sir. To ask a question, please click on the Q&A tab on the panel and click on raise hand button. You may also type in your text questions. The next question is from Darshika Khemka from AV FinCorp. And the text question is, how will the rule of max 5% stake in HPX impact on the company? When does the company plan to divest in its stakes?
Actually, first thing we would like to, approach the regulatory commission. But right now it is premature to take the decision. we will have to take a call. Right now, we would like to evaluate as to how this market is unfolding post this market coupling thing. So decision to divest has to be properly timed and it has to be value accretive for our shareholders as well as SPX. Right now, I cannot give a definitive time frame kind of thing.
Thank you, sir. To ask a question, please click on the Q&A tab on the panel and click on raise hand button. You may also type in your text questions. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Dr. Manoj Kumar Jhawar, CMD, for closing comments. Thank you and over to you, sir.
Thank you very much, shareholders. Actually, your support is very important. And today, I mean, we had faced the shareholders in the AGM also. Hopefully, all our resolutions were supported by the shareholders. I thank you for that also. And we hope to keep a meaningful engagement with you. Whenever you have got any other queries also, you are free to connect with our company secretary department or our investor relationship team. During coming times, we would have many more conferences, some formal, some informal also, and we hope to build a long-term relationship which is based on mutual trust and transparency. Thank you so much.
Thank you, members of the management. Ladies and gentlemen, on behalf of PTC India Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.